Hello everyone, and thank you once again for joining me for this month's edition of our Greater Vancouver Market Update, the place to come for unbiased, unspun analysis of our housing market here in the Lower Mainland. If you find this content valuable, please give it a like, share it with a friend, and if you're watching this on YouTube, please hit that subscribe button down below to make sure that you don't miss out on any future episodes. All right, let's get right into it. The fall market continued its lackluster performance through the month of October, with sales totals now drastically lower than what we're historically used to seeing at this time of year. All the while, new listings have been hitting the market at a higher rate than the monthly average. What does it all mean? Well, first we will break down the stats, and then make sure to stick around for the editorial section of the update, dubbed Boots on the Ground. But without any further ado, let's take a closer look at the numbers. Let's start with the sales numbers, which came in at 1,996 total transactions for the month of October, which is basically flat from the previous month, representing only a 3.6% increase. Historically, sales often spike in October as this is the height of the fall market, so a marginal increase like this is not exactly a positive. In fact, the average number of sales for the month is 2,832 based on the 10-year average, which means that this past month's sales numbers were nearly 30% below what we are used to seeing. Clearly, we are experiencing a slowdown on the demand side of things. The supply numbers also remain relatively unchanged from the previous month, with the total number of listings coming in at 11,599, which represents a modest 1.9% increase from September. What is interesting about this, however, is that of that number, there were 4,664 new listings in the region, and that figure is actually 4.8% above the 10-year average for new listings in the month of October. So we are seeing a more than average number of properties hitting the market this fall. Now, don't get me wrong, I don't think that a number of sub 5% like this is anything to be concerned about, but I do believe that this is something worth watching over the next 4 to 6 months. And so with sales marginally outpacing total listings, our months of inventory trickled down oh so slightly by 0.1% down to 5.8 MOI. Now, I know this is the Greater Vancouver Market Update, but generally speaking, the market here throughout the Lower Mainland is quite intertwined between both Greater Vancouver and the Fraser Valley. And although I won't be breaking down all of their stats here today, I will give you this quick snapshot. In the Valley, which includes North Delta, Surrey, White Rock, Langley, Abbotsford, and Mission, we had the following stats last month. 970 sales, 6,580 total listings, which works out to 6.8 months of inventory. And let me tell you, if you're flirting with 7 months of inventory in the middle of the fall market, that is not a good sign for prices. It essentially means that only 1 in every 7 homes is selling each month in the Valley. And ultimately, what's the most powerful way to cut through your competition in situations like these? It's to offer the best deal, which is why when we get to 5.5 or 6 months of inventory and above, there is significant downward pressure on prices. But let's U-turn back to the Greater Vancouver stats where our months of inventory are hovering close to 6 MOI. And with that, prices continue to trickle down very slowly, at least according to the board's home price index, down 0.6 of a percentage point to 1.196,500. Keep in mind that this is an index that tries to capture pricing trends from Maple Ridge to the Sunshine Coast. Obviously, very different markets in there with various housing types. So this is by no means a perfect reflection of what is happening in individual micro markets. In fact, we have already seen pretty significant price drops in certain segments, mostly in the higher price brackets as there is far less demand at those price points. So that should give you a pretty good breakdown of what is being reported in the stats. Next, let's take a look at how things are going, boots on the ground.
These boots are made for walking, and that's just what they'll do.
So what's happening out there in the market? Well, the sales volume figures don't lie. Generally speaking, there are simply far fewer buyers out there right now. To be honest, it feels more like the winter market in December and January than it does the height of the fall market. For us personally, at this time of year, we're accustomed to be working with 3 times as many buyers as we currently are. And I'm just speaking honestly here because this isn't something that's just affecting our volume and our business. It's across the board. And when sales volume is sitting at 30% below the 10-year average for the month of October, you know that it's relatively lean times throughout the industry. So why is there such a lack of activity out there? Well, the most obvious culprit is interest rates. This is something I mentioned in last month's update. At the height of the COVID bull market back in 2021, a family could take their taxable household income and basically multiply it by 6.5 to determine how large of a mortgage they could get. Today, that number is 4 times. So if you have a taxable income of $100,000, you can only qualify for a $400,000 loan. That makes a huge difference in what kind of property is available to you as a buyer. And that's the biggest reason why I believe buyers generally have really vanished this fall. Prices have started to dip in some areas, but the housing market is not the stock market. You don't get crazy volatile swings in a day or a month or even a quarter. Yes, trends are starting to emerge, but the housing market takes a really long time to adjust. Remember, although there are a lot of investor homeowners in this part of the world, there are also a lot of homeowners that control how low prices will go. And those that are forced to sell may take a haircut, but those that don't have to will simply try to ride this out. There's a lot of pride and human connection that is involved in the sale of your principal residence. And folks just won't sell for hundreds of thousands less than they think they should unless their backs are really against the wall. And this is why, barring a real economic downturn, that prices won't just crater on a whim. Yes, we will see some price correction over the winter months, and I certainly think there will be some deals to be had if you're in a position to act quickly and can find those sellers who really need to move on. But again, the housing market is not the stock market. It takes time for trends to play out. And look, I think it's very important to keep everything that we're seeing unfolding right now in perspective. The fact of the matter is we are still sitting below 6 months of inventory in Greater Vancouver. We were at 7.3 MOI less than 11 months ago back in January, and then look what happened. The market just took off again and it turned extremely quickly. And although I don't have a crystal ball as to exactly what's going to transpire next, the one thing I do know is this. We live in a region with a massive housing shortage and a booming population. There is no doubt we are currently in the middle of a credit crunch, which is acting like a blanket on the supply and demand paradigm. But at the first sign of that credit crunch easing, I believe activity and prices will once again take off because of the factors I previously mentioned. Shortage of housing and population growth are simply not aligned. All right, that's it for me for this month. Please drop us a comment down below if you have any thoughts about this month's update, and I'll catch you right back here in about a month's time. Take care, everyone.